Evening, ladies and gentlemen. Welcome to the Rates and Lanes podcast. I'm your host, Rico Muhammad, and I will be joined, host, and our very, very special friend of the show, Mr. Dean Croke, is joining us today. Would like to ask you guys a huge favor. If you would do us a huge favor by liking, sharing, and subscribing to the video. It really helps us get out to a broader audience and helps us expand our reach, and hopefully puts us in the preview of our target audience. And if you find any information tonight helpful, useful, or entertaining by any stretch of the imagination, by all means, please refer us, like us, and share the video to someone that may be able to find this information useful. And with that being said, I want to welcome in my co-host, Chuck Snow. Good evening, Chuck. I'm saying evening.
Oh, good evening, Rico. How are you?
I'm saying evening, even though it's morning when we're doing this, because I'm so used to saying evening, but we're actually up pretty early in the morning recording the show for a later broadcast.
Well, we're all over America today. Rico, your sound, I don't know what my sound is. Yours is a little wonky. I'm just letting you know. You may want to take a look at that. I tried to send you a message.
We'll try and refresh here on my end. But how's it going on your end, Chuck?
Well, we're doing well. I'm actually, and I'll share this with our listeners. I'm out in beautiful Rochester, Minnesota, which is about 70 miles south of Twin Cities, and I'm at a facility called the Mayo Clinic, just getting a checkup. And what a wonderful place! My God, I've never seen care like this in my life. I'm blown away. I've been here before for a checkup, and it just keeps getting better. So if any of our listeners are having any questions about their health, it's probably well worth your while making an appointment to come out here. And the Mayo Clinic has not paid me to say anything. This is a public service announcement to our listeners.
Good deal. Well, we hope everything checks out and goes well for you while you're up there getting the extra check under the hood there, so to speak.
Well, the doctor yesterday told me I had to lose 5 pounds, and I said, well, I want a second opinion. He said, you're ugly too. But other than that.
Well, with that being said, we don't want to keep our guy waiting. Good friend of the show, Dean Croke from DAT. Good. Well, we're gonna correct ourselves and say good and give you the correct salutation. Good morning, Dean. How are you?
Yeah, how about just g'day? That'll cover everything. Yeah, great to be with you guys. This is fun. I love talking to you guys.
Well, we love having you on because you always have such great information, and you've done so much in your careers, not just career, but careers.
There's another career on Facebook that we're starting to see, right? Those shady 1980s days in Australia.
Well, we had some here on this continent as well. You guys didn't own exclusivity to shady.
That's what I keep telling people. I posted a picture of a truck I used to work for and had FH on the door, and I said that stands for fast and heavy. And they said, "Oh, that can't be true." And I said, "Oh no, you have no idea how fast and heavy." But hey, you're in the home of the Big Iron Classic, right? In Minnesota. That's one of the great truck shows in the Midwest.
Yes. And I'm also in the very home of a wonderful private truck. Well, it's actually a public foundation, the Nuss Collection. I don't know if you're familiar with it.
Yeah, we had him on the show.
Yes, and I actually spoke to Bob Nuss the other day, and I'm hoping he will take me to his. I don't know whether Bob's listening today, but I'm hoping while I'm here, he'll take me over to his museum. He has a private truck museum, mostly Max, I understand. So I'm going to be speaking to him later on again today, and see if I can wiggle an invitation out of him to go and see his museum. So I'm certainly looking forward to that. They have 9. They start off with Max, and then they are a Mack Volvo dealer in this region. So they have 9 dealerships. Quite a success story.
Some of the trucks you posted about at the ADHS event, Chuck, were just staggering. Some of those old Macs that have been done up, like Gary Mahan, is it Mahn? Gary Mahan's collection?
Yes.
Just breathtaking. I did a video of the 1944 chain-driven Sterling and the AC Max that are chain-driven, and like the Sterling's got the little oil filler signs that says "Turn on oil oil filler daily," and it drips onto the chains. Like,
Yeah,
just
it was really funny at that show, that ATHS show that I saw you at. The park next to my little Ford inside the building was a 1937 Mac. I think it was an AC, chain driven, open cab. It was a pretty. It was a real antique. Across, just right across from him was a 1951 Mac L model. And I could not believe how the trucks had changed in about 15 years. It was unbelievable. It was the greatest change, because that L model resembled, now it's a far way off from a 2024, I have to say, but at least it had an enclosed cab, and it had a drive shaft, and it had a diesel engine. Well, they both had diesel engines. It had windshield wipers. It had a windshield. It had doors. It had windows. All the creature comforts.
What about? I was looking at the S925 Kenworth that was there out in the grassed area, and it had torsion bar suspensions. And I thought, oh my God, I've had one of those torsion bars let go in a corner one night. Like they are pretty wild technology for the day. But
yeah. Let me ask you, when you had one let go, how many trailers did you have behind you?
So I was working for a company called Quick as Air.
Oh, I know that.
Yeah, so Quick as Air was part of TNT.
Right.
And we used to haul all the air freight we used to haul air freight by road because we were quicker than the planes point to point in the capital cities because of restrictions on when they could fly. So we used to go pretty hard with one trailer, like only 40-foot trailers back then, but we used to literally fly in these things. The gig was up when someone put an altimeter in an air freight box, and it never got above 6 feet the entire night. So they got into a lot of trouble for charging air freight for for us hauling it by truck. So,
Dean, that's been going on in North America for decades that I know of. And what I tell people, I've always told people, most air freight of any weight of about 5,000 pounds or more will never see an airplane. And I remember once having a big client of mine calling, and he had a 10,000 pound machine. And after he took it to the airport, he had second thoughts. And I said to him, Mike, I'm telling you right now, that thing's not going near an airplane. If you really need it there Monday, call me back and I'll get you a team. But I will bet you any money, I'll bet you the price of that air freight bill that it's not going on an airplane. It'll never get there by Monday. Oh, yes, it will. They promised me. He calls me Monday morning. He said, "Can you get me that team? It's still sitting at the airport."
It's a bit like when you get to a Thursday here in the US, you're almost guaranteed that air freight's going to go on like a FedEx Ground double at some point, because if it's a 2-day delivery on a Thursday for Monday delivery, it's going on a truck all over the country. That's
of course.
Yeah.
When we were running California with teams, Friday was a really good afternoon because we would work with the air freight guys, and they would load us on Friday night, and our guys would get in Sunday night, early Monday morning. Nobody knew the difference.
Yep. We used to do that in Australia, 43 hours from Sydney to Perth.
With
a couple of stops.
Your roads were a lot rougher than ours.
And dead straight. It's the only thing we have to worry about with kangaroos and camels.
Dean,
all right,
give us the skinny, Dean. What's going on? We it's been a little while since we spoke, but we're always in an ever-changing market. Are things getting better, or are they kind of just treading water and we're kind of just staying the same? How are things? What's the outlook been for the past couple of weeks here?
We've started to see some life in the spot market and contract market. So contract is about 83% of loads. Spot is about 17% of loads. So that's higher than where it normally sits at 90-10. So there's clearly a trend of more volume moving on spot. We're still seeing carriers exit the market, but for the first time in many years, I'm seeing seasonality emerge with fairly good numbers, like fairly definite trends as we head into June. Now, rates are up again for the second week. Don't think, people shouldn't confuse that with, a significant market flip. But spot rates are starting to come back up again. They went up another 2 cents a mile this week. Reefer rates went up 3 cents a mile. Flatbed rates dropped 2 cents a mile. So that's exactly what you would expect for the early part of June from a seasonal perspective. Pulling back out a little bit, the big news this week is that spot rates went positive year over year for the first time in 27 months.
Wow.
Whoa.
So now, when you look at a chart of seasonality going back to 2012, you see these sort of ups and downs like a roller coaster in rates. And we define a freight recessionary period as when rates go negative year over year. So if it was $1.65 this week, it was $1.65 this week last year. So that happened literally at $1.65 and $1.65 this year compared to week 25 last year. They actually crossed over where it became ever so slightly positive since April 2022 when they first went negative year over year. So that is significant because we've been waiting for this crossover period to emerge. Now, I think the caveat here is that we'll see after July 4 that come back down a bit. So we'll know if this is sustained, if rates stay positive year over year after the July 4 peak in dry van and spot rates. So, but contract rates, when we look at shippers who deliberately go to the spot market, they're positive year over year also. And contract rates coming out of RFP negotiations are almost at parity. So they're in the 1% to 2% lower range. They've slowed right back down. So that sort of echoes what we heard from Derek Leathers this week, Chuck. He's talking about there's still downward price pressure. There's less churn on the, shippers weren't, as quick to shuffle the deck, in terms of reorganizing all of their carriers in their routing guides. So for those listening, if we were talking a year ago about contract rate RFPs, they were going down at 12 to 15% every month. So that meant that new rates coming into routing guides were 12 to 15% lower than the lanes they were replacing from the year before. Right. Now, so the good news is that the rate of decrease of new contract rates has slowed right back down to very low single digits and is showing signs of bottoming out and starting to turn positive. So if you think about contract rates at the bottom of their cycle, spot rates have definitely bottomed out and are starting to show signs of increasing materially. And it feels like after 27 months of negative year-over-year rates, we're at that inflection point where enough capacity has exited the market, against fairly soft moving sideways demand, that we should see this floor in spot. We should see this lift off the floor in spot rates. That's sort of where the market's at. Rico, to sort of answer your question more specifically, dry van volumes, we're moving more loads than we were this time last year. We're moving 4% more loads than last year for week 25. So we're moving more freight on the market. Rates are a little bit higher than where they were last year when you look at dry van. I think the other data point that I saw this morning that was really interesting, if you think about tightness in the market, load posts on our load boards are a proxy for how hard or easy brokers are finding carriers. So when load posts go up, that's telling you that brokers are posting more loads to try and find carriers. Load posts this week were the highest since week 25 in 2021.
Wow.
So, there were just over 1 million load posts in dry van. So that's a really interesting data point. We're seeing whenever, and always brokers are always over posting. So they double post some loads to try. Right. But it's a valid data point, even though we get criticism for our load to truck ratio because it's got multiple load posts in there. Directionally, it's still a very good indicator of which way the market is going. So as load post volumes go up, spot rates follow the same trend. and load posts are going up in both dry van and reefer, but going down in flatbed. And I think what I would say is that capacity is definitely tightening in dry van, and I think tightening more in reefer because it's more specialized. I am really worried about flatbed because I think flatbed, with machinery sales are 30% lower than the 5-year average. Housing starts this week absolutely tanked. Single family housing starts were down. What were they down? 5%. They're down 3% year over year. But to be clear, we're still hauling. If I went back and said, well, how many homes were built this time last year? We've still had 22,000 more flatbed loads this May than last May, and about 44,000 more flatbed loads compared to May of 2018. So even though the numbers show that single-family housing numbers are starting to taper off and fall as interest rates sort of really bite the new home market, when I couple that with machinery sales down, higher interest rates putting a lid on housing construction, I'm really concerned for flatbed carriers. And Chuck, we talked about it this week on some of that cross-border. I think Canada is probably more exposed than anywhere for this ripple effect that could affect the US trucking market because of some of those the big bankruptcies that are being talked about. I had a carrier, a friend of mine, who hauls coil out of Toronto to the Columbus, Ohio market. They don't have any backhauls. Tom is a 30-year veteran owner operator. He said he's never seen it this bad in terms of the US to Canada shipments of flatbed freight. So I think I see some warning signs for flatbed, absent the major hurricane events that seem to affect the southeast. I don't see anything on the horizon for flatbed that's going to do anything to stimulate that sector, because normally when we get to June, flatbed rates start to taper off and drop, and so do volumes, because the first half is always planting season, construction season, right, building season, nursery season, all those sorts of good things. So I think dry van reefer, different story, Rico, to sort of give you the broad market synopsis. I think flatbed is a little bit more concerning, but for the first time in many years, seasonality has emerged in the freight market as enough capacity is starting to exit, and we're seeing fewer carriers exit in June than May. So we're definitely getting to the tail end of that excess capacity leaving the industry. That's clear. There's a couple of trends that are very clear there.
Well, and that's really what we needed, we needed that excess capacity to exit the industry, so that things can start heading back into a normal direction. As far as the flatbed, you think of even large companies that manufacture product and they need machinery to do it. Updating machinery is not, right now, because I don't care what anybody says about retail sales. I've been to 3 Target stores in 3 weeks.
Yeah.
And I got to tell you, you could make a bowling alley out of those lanes.
Yeah.
There's nobody in there. And Target is a low cost thing. So the manufacturers that make all that product that need machinery to make it, I don't think they're updating their machinery at this time yet anyways.
Yeah. Well, if you look at manufacturing numbers, and this affects Rico because in the food business, we're seeing much lower food production. When you look at the FRED database, the Federal Reserve database out of St. Louis, where they look at the manufacturing data, manufacturing generates about 60% of our ton miles in truckload. So it's not imports that drive trucking, it's manufacturing.
Yeah.
But manufacturing's down about almost 1/3% last month. It's down about 0.5% year over year, but it's down 2% compared to May of 2018. Right, so May 2018 was a strong industrial economy, and you've heard people like Jason Miller talk about the manufacturing that drove the 2016-17 cycle and 18 cycle. We're not seeing that rate of growth, so manufacturing is not strong at the moment. It's sort of down compared to our last busy industrial season. But food is down 4% year over year, and Rico, food is 4% lower than May of 2019. So food is a big driver of ton miles, whether it be dry van or reefer, and I think that's has a lot to do with how we are as consumers. You read stories about how sick and tired people are of inflationary effects on food, at fast food. I think a lot of us have changed the amount we spend and what we're spending it on. And I think, and produce volumes are still down. I quickly look at that right now. Produce volumes are down about 6% year over year. So there's less reefer loads. We're seeing less beef being moved, less pork, less chicken. So I think there's something there that says that, truckload volumes are sort of flat to moving sideways, driven largely by some very soft numbers in both manufacturing and food.
I have a relative that was in the grocery industry, and he said to me, you can always tell, you could get a pulse of the economy. When things are good, people ate beef, they ate steak, when things stopped being good, they would eat hamburger. And when things got real bad, they were eating pasta and beans. And he could see it right in his grocery store. So I think that's what we're probably seeing. Everybody has been affected by inflation. And contrary to what a lot of financial pundits said about, inflation 5 years ago or so, I think I was with Rico listening to I think his name is Broughton, a phenomenal economist, and he's always on the money.
Yeah.
And I remember him telling us at a conference how there is a snowball's chance in hell of there being any type of inflation because of technology. It would not allow it. Well, he was wrong on that one because, we've had inflation unlike anything we've seen in decades.
Right.
Because
and I think,
go ahead.
And we're seeing, the amount of inventory held in cold storage is always very interesting. When you see the amount of, according to the USDA, the amount of, billions of pounds of inventory in cold storage up 1% year over year. If you've got stuff in cold storage that's increasing, it means it's not moving out of cold storage onto the shelves. And so it's a little bit higher when you look at the total. There's a little bit of a difference when you look at whether you're looking at beef, frozen poultry, vegetables. It breaks down a little bit differently, but across the board, you're seeing a little bit more frozen inventory sitting. I remember a survey we talked about a little while ago, and this was done from point of sale software. It showed that this time last year, people were spending 40% of their weekly budget on food. This year, it's 30%. So there's all these indicators that tell us that we're spending less. In fact, USDA numbers have just come out. We are down about 6%. California is still about 9% behind where it was this time last year. When I look at the numbers, guys, normally this time of the year in June, produce volumes are going up at a clip of about 10% week over week. The latest numbers here, they're down 15% week over week. And I don't know, this could be, what it feels like is because July 4 is on a Thursday, I think this feels like the peak in shipping 2 weeks out from a major event. Because shippers, it looks like 2 weeks out from a major public holiday or event, they start to get inventory into markets, positioned in stores. That's what this feels like, is that we're seeing the peak. And of course, there's some commodities that'll move fairly quickly, like cherries out of the Pacific Northwest. They'll move in that week of July 4. But I think generally what we're seeing is this positioning of freight ahead of July 4, because I think July 4 is going to be a very soft shipping week, because the truckers know that in a week where where a big event falls on a Thursday, there's a high probability you're going to be under a load for 4 days. Easily. And I think what you'll find is this could be another one of those situations where carriers turn a 3-day shipping week into another vacation / road check type week where they take the time off, because I think the economics of that week are going to be pretty bad if you've only got Monday, Tuesday, Wednesday to get dispatched.
Yeah, and if something happens, you've got a truck stuck under a load, especially if it's a load of produce in the middle of nowhere with a long weekend, and you don't want to do that to your drivers. July 4th is a huge holiday in the United States. It's almost a religious holiday for a lot of people. I'm not saying it is, but it's almost. And we've done it ourselves where we've had drivers stuck and you have to fly them home because you know what, they're going to be stuck on the road somewhere and
Yeah.
not going to be able to spend time with their family. That's how you lose drivers.
Right.
And you don't want to, everybody says there's a lot of drivers around. Yeah, there is, but there's not a lot of good drivers around. The good
Right.
drivers have good jobs, and you look after them.
Yeah. Yeah. So, and added to that, we've got the USDA have had some security issues with their staff on the southern border.
Yeah, I was reading a story about that.
Yeah, and that's affecting produce volumes across the southern border. So that's another drag, because the Mexico side of the market is, sometimes 20 to 30% of our truckloads in any given week. So it's a pretty big deal when you see Mexico volumes down, as of today, down 20% compared to this time last year. They were down 33% last week. So that shows you that avocados, tomatoes are the big products coming across the border right now. They're taking a hit, and that's impacting those markets. In fact, tomatoes are 15% of the truckloads this week at 1,200 truckloads, avocados at 9%, cucumbers at 8%. But their volumes normally peak, sometimes late May, but right now they are way, way down, which of course is going to affect that truckload market that's heavily dependent on cross-border volumes especially in McAllen, in southern Texas, where if I look at the rates this week, I can tell you where they are right now. I think if you were carriers, Rico, you'd be steering clear of that market. Maybe that creates a shortage of capacity. So here's an interesting data point. In McAllen, where about 60% of Mexico produce crosses across in far Texas, rates are up 4 cents a mile, but volumes were down 10% last week. So reefer truckload volumes, it tells you that, I think, this is what smart carriers would do. If you're aware of it, Rico, other carriers are aware of it, and they would steer clear of that area. And in a strange way, it actually tightens capacity because there's fewer carriers heading into that market.
Right. It's amazing how, like I say, it's kind of like seasonality is having a good effect at this time, but at the same time, we're still not making real. We're kind of,
right,
I don't know, regressing, so to speak.
Doesn't move the national needle that much, and that's why even hurricane season will impact regionally, but it won't move the national needle so much. It takes a massive event like the polar vortex in January, right? Yeah. That moved the national needle. Road check week moved the national needle. Oh, yeah. So it takes, but we are at a point in the market where it won't take a big event to move the national rate needle, because there's so much capacity that has left the market,
right?
Over the last 18 months. And I think that's the point. Even though we still talk about an excess capacity, we're at this inflection point where supply starts to equal demand in the market. But I think for the more specialized dedicated carriers, that's where capacity will be much tighter. So, multi-zone, multi-temp zone reefer trailers, side door, drop decks, with outriggers and ramps. When you get into specialized trailing equipment, I think that's where capacity will be the tightest. And I think there's an inverse relationship maybe, where those sorts of equipment types require a lot more economic viability in the business operator. They've probably been around much longer because they're much more equipped to handle that specialized freight. And I think that's where there'll be opportunity for those carriers. I think the more specialized, the tighter the capacity will be.
Well, you know what? I was talking to a gentleman last week, just to prove your point, who was telling me that was at Makunji. Yep. And he's got a van with a walking floor.
Right.
And he was telling me that, he hasn't slowed down at all.
Right.
But he has, there's a barrier to entry. He wasn't able to go over to extra trailer rentals and rent a dry van for $395 or $495 a month plus mileage. He spent a lot of money on this trailer. He probably spent $100,000 or $150,000, whatever it cost him. I didn't ask, but he was telling me about, how, and he does run one truck. He runs all over the place, and he has no problem getting loaded because he finds loads that suit that walking floor. Brokers are quick to load them. You talk to people that run pneumatic tankers. They're not slow at all. They're busy. And if I have any advice for any of our listeners out there that are carriers, I heard a great line from a new friend of mine. Niches make riches. And it's so true. If you've got to, differentiate yourself from the rest of the herd if you want to be different than the rest of the herd. You've got to do something. You're going to have to make an investment in some sort of equipment that just takes you out of the regular dry van or reefer market, because there's so much capacity in those. And I'm speaking of that, I'm starting to think that maybe some of the banks are wanting to start exercising their right to pull lines of credit where it's needed, because they see that if they do this, they will, by culling the banks, culling the herd, they will actually protect their own investment. So they may have $300-400 million that is lent out on trucking, and they may lose 100 million of it. Will go away, but that protects their other customers.
I was struck by a social media post talking about diversification and being, there was a guy that had loaded coil, a 30-ton coil of steel in a end dump, A-frame end dump.
I saw that.
And like no secure points, and you think, wow, how the heck did you get that there? But it had a little triangular, maybe an inch high, Chuck, maybe 2 inches high, a triangle shaped guide rail down the center to kind of hold the coil in shape. But man, you wouldn't have had to hit a corner all that hard to have that thing come through.
There's nothing holding that thing, and that thing's going to go airborne, or it's going on wherever it's going. That's a lot of weight.
Yeah, there's some crazy things going on out there, but I think we're at the bottom of the cycle. But I am concerned, Chuck, about the Canadian market. I don't know how to get a read on this. We've had great story by John Kingston in Freight Waves about BMO, the big lender of trucking capital, talking about their write-offs and their concerns. They were saying they're past the worst of it. You've got there is a big carrier up there that I think is still going through the court protection bankruptcy process, but that's a big carrier.
They're winding things down. I believe they're trying to. I think the receivers are in running it right now. So you know how that works. I've never seen as a rule. Now maybe they'll be able to sell it, but I really doubt it. I hope for their sake they can, but who knows? The problem with the Canadian market, as I had mentioned to you, Dean, the other day, but I'll tell our listeners, is especially in the Ontario market, you've got so many carriers, and good carriers of all sizes, from 3 trucks to 3,000 trucks, concentrated in an area with tons of brokers. Every broker, including pretty much C.H. Robinson, all the big guys have a footprint there, and you have a concentration of shippers, but there's not that many. They're all in a tighter area. You have most of the shippers, it's concentrated in Toronto anyways. There's really a handful of big shippers. One of them makes office furniture. They're mammoth. They're probably there's one that makes office furniture, and there's one that makes shampoos and soaps. They are 2 of the largest shippers, I would have to say, non-automotive in Southern Ontario, and they can get whatever rates they want, and they do. They play that market because they know that's that affects their bottom line.
Right.
And because they're dry commodities, it's not like hauling reefer freight, and they are aware of when all these areas are hot for produce, and then they will load reefers and they will give their dry van carriers freight. So if they're using a dry van carrier to Florida all year, but they know there's Florida starts moving with its reefer freight for an 8 or 12 week period, all of a sudden they start giving those loads to the reefer carriers for $1 a mile cheaper. That's what happens.
Right.
Because these guys are in business to just make money. There's no loyalty there. So that's part of the issue.
And Rico, just to expand on my flatbed comment a little bit earlier, I just quickly looked at the Baker Hughes rig count, which is a count of oil and drilling rigs each week. They publish it each Friday. Came in at 588. So remember, 50% of maybe 60% of the oil rigs and gas rigs are located in the Permian Basin in West Texas, in what we call the Lubbock freight market.
Right.
We're 94 fewer drilling rigs than this time last year, but production is up. So they're producing more oil and gas per rig, but we're building fewer rigs. So that translates for flatbed carriers
Sure.
in the Houston market into fewer loads, because one of the biggest manufacturers of drill pipe and casing is in Houston. It's an Indian-owned company out near Baytown, I think. So when I look at Houston to Lubbock flatbed loads, to give you an idea of how soft that lane is because of fewer drilling rigs, the volume of loads moving between Houston and Lubbock is down 11% year over year. Rates are down 15 cents a mile. So that's why you've got to look at fairly regional data points. The national needle is one thing, but locally, that's where you can get a sense. And flatbed, Texas is our biggest flatbed spot market, and Houston to Lubbock is by far the number one lane. Houston to El Paso is the second highest in the country for flatbed loads. And if I quickly look at Houston to El Paso, it's down 12% year over year. Rates are down 13 cents a mile. So that's when I look at those sorts of numbers, I get concerned about the flatbedders in the market. I think absent any major event with hurricanes, the southeast could be a fairly weak market. But heck, we've had our first named storm of the year. There's a high probability we're going to see some pretty severe hurricane action down there this year. Hopefully we don't. This is one thing I'd like to see not happen, but I think there's an inevitability about what's going to happen down there this year.
Yeah, they are calling for a bad year, but
Yep.
I hope they're wrong for people's sake.
Yep.
It gets ugly. People get hurt.
Yeah, so I think the flatbed loads, we're across the board. When you look at each of our equipment types, the volume of loads moving in the spot market is up year over year, but the rates per mile are down. Right. So normally when you have higher volume, when you've got tight capacity, rates go up. What we're seeing compared to last year is still this oversupply of trucks in the market, driving rates down, but I think driving them down at a slowing rate, if that makes any sense.
Yeah,
there are definite signs the market has bottomed out across those major equipment types.
Well, you know what? It's good that if we've hit the bottom, if this is really the bottom, there's only one way to go, guys. It's going to go up. It's going to take a while.
Yeah. Right.
But, and you can blame it on anything. You can blame it on the current administration in Washington. But I think it's more than that. I think it's a world economy.
Yeah. I think the other thing, though, that's going to really compound things this year is there's clearly a 2027 pre-buy of new trucks underway. Now, if you look at this new EPA regulation coming in 2027, where they're talking about things called cylinder deactivation, heated DEF fluid, there's some things, and the early numbers show it's going to add about 30 grand to the price of a new truck. I think that if you look at the ACT Research month-over-month numbers, where truck orders were up about 40% year over year, when you talk to the folks at ACT Research, there is clearly a pre-buy underway, and it's also driven by a pre-buy on the private fleet side of the ledger. Private fleet trucks have an 8 to 9 year life cycle, so that spans 2027. So you can see what they're doing in that space. But if there's and Chuck, I heard it at York, PA, at the ATHS event. People were talking about buying W900 Kenworths now to get ahead of 2027, because I think our memories are pretty good when it comes to DEF filters that came in 2007 and how much trouble that caused the market, because there was a hit on MPG, there was a hit on operating costs. And if you go back to ACT Research numbers, we produced the most number of trucks ever at the end of 2006, because carriers were pre-buying
pre-2007
trucks. we're seeing the same thing happen now, but I think in an even bigger way. Now, where I'm going with this is, if new fleets are going to buy a lot more 2027 trucks now, where do the used trucks go? And of course, we're already seeing used trucks hit the market, used truck prices coming down. The weird thing of this is that lowers the barrier to entry for more carriers to come into the market.
And it's going to happen all over again.
Yeah, like
Exactly.
you can see what the second half of this year looks like. And that's why I think rates are going to be fairly flat through the rest of this year, because you've got two things happening. You've got fairly soft demand, like we just talked about manufacturing being fairly flat. And then you've got this excess capacity that I think is going to keep a lid on things. That's why when DAT talks about not seeing any material improvement in the freight market until early 2025, this is why. Because I think we're in one of those really weird stages where 2 years out from this new EPA regulation, we're seeing people will start to get ahead of that, and that's just going to create this oversupply of equipment.
So there is light at the end of the tunnel, but it's a train.
It's a train.
Yeah, you know what? Until we figure out something to do with these used trucks to get them out of our market. Okay,
right.
And Nigeria can only take so many. I know they do buy some, some of the older trucks, but how many are you going to dump in one country?
Mexico Europe takes about 30%. Yep, they can only take so much.
Europe doesn't want these trucks because they're not. They're not for the European market.
Yeah, they can't get in them fit in them tight cobblestone streets they got.
Did you see the news though this week on Mercedes-Benz? They've got their hydrogen fuel cell truck running 600 miles at 80,000 pounds.
Doesn't surprise me.
And the tanks are the same size as my 150 gallons on my Peterbilt, and they take 8 to 9 minutes to fill. Like, that is huge news. That sort of the headline in I think it was Heavy Duty Trucking says Daimler-Benz leaves Tesla in the dust. And I thought,
you know what, guys? This is like, I knew a fellow up in Canada in 1981. I met him, and he was working on hydrogen-powered cars.
Right.
In 1981, he had the city of North Bay, a bunch of their local cars. That's where he lived in North Bay, Ontario, Canada. He had a bunch of the municipal cars running on hydrogen in 1981.
Yep.
And he was given $50,000 to further develop it, and that money went into something else, which is unfortunate. But he had trucks. He could make a hydrogen. He could make a truck run on hydrogen. The guy was a genius. So this doesn't surprise me. The problem I've said all along with the electric trucks, it was just too hard to make them work. It was just too impossible. The only thing I've heard about hydrogen is the difficulty in hauling it and moving it around. But I think we have enough smart people working on technologies. I think they've got that one understood now.
Yeah, I was just fascinated by the range. You know, they've Mercedes-Benz are pretty good when it comes to developing technology that is almost certainly going to be implemented at some point. They're talking about production of these trucks in the next, like before the end of the decade. So, I think they'll be fairly aggressive in getting these trucks out on the road in the 2027 timeframe.
Oh yeah, this is the same company that invented the diesel engine, really. If you look back.
Yep.
Rudolph Diesel was connected somehow, and Mercedes has been making diesel for years and years and years.
Did you? So I've got a book here called "The Mysterious Case of Rudolph Diesel."
Yes.
There's a story that he got whacked.
Yes.
Bumped off the ship because he was a major threat to all the suppliers of energy back in the day, because they didn't want diesel in World War One, I think, was the deal. Yeah,
that would exactly
doesn't surprise me to hear that being said.
People start randomly killing people. They don't stop. This guy's a threat to him. He's overseas, overboard.
My dad's 1418 Benz, that was a 1967 1418, had power steering in 1967. Think about that. And Chuck, at the York historical show, how many cab over Peterbilts and Freightliners did we see with no power steering? Like you see the guys come in and they're trying to correct as they back in, and yeah,
Even
everybody
one,
walking around with the Popeye forearms.
right.
Well, even some of the ones from the late 70s didn't have power steering.
Right. Yeah. Yes,
Early 80s. It wasn't until probably the mid 80s everything had power steering.
Right.
So,
Yeah, this is kind of fascinating. So the other thing is shippers are. I think just to sort of get back to where the market's at, as we talk to shippers are clearly aware that this market is going to flip. You can see it in the rate of reduction. I think a lot of shippers have played the market down to a point where they are at now, where they realize that they need to start talking realistically to carriers about what their rates are going to be.
Yeah.
So, that's pretty good. Funding is fairly hard to find in this freight circle for new startups, new freight startups and venture-backed brokerage. It's very difficult to get funding right now.
Oh, yeah.
We're seeing companies, P44, there's some big companies just sort of going through massive layoffs. I think shippers are definitely feeling a market shift. We'll know if this is sustained when we get past July 4. So that first week after, we should come back and chat about what that market looks like after July 4 has worked its way through the market.
I would like to, because it's certainly indicative of what the future holds. We just seeing a little bit of a blip in the market because of the holiday, or is there some real positive changes ahead?
Yeah, and I think the news that John Deere laid off a bunch of people this week is really concerning. To my earlier point about machinery sales being 30% lower than the 5-year average, there's some pretty dismal numbers for 4-wheel drive, 2-wheel drive, combine harvester, tractor sales. That's concerning. And then you've got massive layoffs. Now, there's a little bit of scuttlebutt about the layoffs of John Deere being more about stock buybacks and people trying to profit from it. But I suspect when you see that happening, there's something else going on the demand side. So we've got to watch. I think flatbed carriers are probably the ones that I could be concerned about the most in this fairly soft market, because we are seeing, getting back to load to truck ratios. Load to truck ratios are a really good proxy for where rates are.
Right.
Last week's load to truck ratio was 13.75. That's the lowest load to truck ratio I've seen since 2016. Like, that's a really low number. Now, if you just remember during the crazy days of the pandemic, say in 2021, the load to truck ratio in 2021 was 65 loads per truck. Right. It's now 13.75 as of this week. So it's some of the lowest load to truck ratios. Again, just to refresh, load posts are a proxy for demand and upward rate inflection. Load post volumes are going down in flatbed, and some of the lowest load to truck ratios we've seen in a long time. And Chuck, on that lane between, back to my discussion this week, Columbus and Toronto, we're seeing 2 loads per truck on that lane. So on some lanes, that there's if you take into account overposting by brokers, it's almost like you could say safely 1 load for every truck on that lane. It's probably less than that, but nationally, load to truck ratios in flatbed are pretty weak. Whereas in dry van and reefer, you're actually seeing fairly solid load post numbers, like much higher than previous
because
years.
We all need, we are all buying food. Maybe we're buying pasta and beans or rice. Rather than roast beef or fish. That's one thing. And then just things that you need in your home, paper products and soap and all the rest, and clothing. And, the dog chews up a leg of a chair, so you got to buy a new chair, or, that lawn chair. You just can't get another year out of it. It just can't take another afternoon of sunshine. The one thing I've noticed through the years, and with farm equipment, which when I started driving, I would see a load of, in the US, I would see 1 load of farm machinery once an hour on average, anywhere I went in the US. Didn't matter where. You'd always see a load because it was en route going somewhere. You don't see that anymore, and you're seeing less of it now. And the reason is because you've got a lot of consolidations on farms. Back then when I started, you could have 100 acres and make a living. Now, even the guys out west that have 5,000 acres can't make a living. They've got to sell out to somebody, to a conglomerate that's bought out all the neighbors, and he's got 50,000 acres, so he can buy that $1 million combine to do 50,000 acres, and now they're even doing it autonomously.
Right.
They're running them 24 hours a day without any labor behind the wheel. So that's made a difference. Well,
Dean.
We lost volume here.
We lost your audio, Dean.
Sorry.
Oh.
My cleaners just turned up at the house, so they're making a racket downstairs despite me texting them. Anyway, so load post volumes, load posts are proxy for demand, how hard brokers are finding it. When I go back and look at non-pandemic years to get a gauge for what this time of the year looks like, dry van load posts are 15% higher last week than the average going back to 2016 without 2020 and 2021 in there, right? So if you take out the pandemic year, so we're posting more loads. In refrigerated, we're posting only 3% more loads than we would have done in non-pandemic years. So that kind of fits where the reefer market's at. Flatbed, though, is 47% lower than the non-pandemic average for load posts. So that just tells you how soft the flatbed market is going to be. And I think that's largely because of all the things we've just talked about, machinery, farmers, construction numbers. We're certainly seeing a peak in warehouse construction. So we're seeing, some softness in that market start to appear. Single-family housing starts are way down, which means less machinery moving to prep the lots. All those sorts of things are on the horizon. So I see some, I've said it 1,000 times already.
I got to ask you a question on the flatbed. I can't speak for the USA, but I can certainly speak for where we live and operate out of Southern Ontario. I have seen an awful lot more flatbed equipment being put out there, like more flatbed companies come in business in the last, let's say, 5 years, owned by ethnic people that were smart enough to realize that the dry van and reefer industries were oversaturated. They wanted to do something else. And with the invention of the curtain side trailer, they didn't need the manpower to be able to load freight. When you start throwing tarps in the winter, it takes a certain character to do that. And a driver without as much training could operate a curtain side trailer. And these guys have become very proficient at it. I don't know if that's true all over America or just where we live, but you've got it seems we have a lot more flatbed carriers now than we did, let's say 10 years ago. Are you seeing that in the US as well?
I'm not in our data, certainly not in our rate data, and I don't have equipment data broken down by trailer type on the trailer side. So that's a data point I'd have to research. But it kind of fits what I hear and what I see out on the roads. I think it gets to where we started the show. I think the carriers that are highly specialized are going to be quite okay in this next market cycle.
Yeah, but I think specialized means more than having a flatbed with a curtain side around it. I think that, I think you've got to really be specialized with. I know that talking to some people last week in Macungie that were livestock haulers, and they seem to be fairly busy still.
Yeah. So we've got a few minutes left, but I think the other thing we're going to see this year is a lot more M&A activity. Right. So we've also got, I think there's some carriers out there that are, the cost of capital, higher interest rates is really starting to hurt. Lower rates is, I think there's some things happening there on the large fleet side we've got to watch. But we think we'll see a lot more businesses change hand in the next 4 to 6 quarters. The venture capital and PE firms are going to want to see some liquidity out of their investments. And I think what we'll see is that the first sign that this market is starting to recover and things are improving, you'll see a lot of those private equity firms and VC firms exit their investments, and you'll see a lot more turnover. That could extend to brokerage firms. It could be a lot more M&A activity going on there. You've got to watch all those sorts of things. there could be some opportunity for bigger carriers to get even bigger by through M&A activity. So I think consolidation is certainly going to be on the horizon.
I couldn't agree more, especially on the asset side. I think you're going to see a lot of consolidations and acquisitions and mergers, because you've got, first of all, you still have a lot of people my age, between 65 and 70 sort of thing, that current ownership wants to divest themselves. They've worked all their lives. They want to have some time to smell the roses. And you're going to see more of that. And then a lot of them are being forced into it, almost like they're tired of weathering this storm. They hung in a little longer, and and they were able to steer the ship through the storm because they had done it before. But after this storm is over, they're going to want to get into a harbor, dry off a little bit. So I think you're going to see an awful lot of that. And I think just for survival alone, you're going to have two carriers, and they could even be mega carriers out there, or they could be small carriers. It's the same principle. And if they merge their overheads together, now all of a sudden they need one safety director and one director of sales, and it goes right down the line. They may be able to consolidate terminals or have the terminals work cohesively with each other. There's all sorts of weird and wonderful, but they'll certainly be able to, maybe they can shed some of the equipment because they're running the same lanes, all sorts of things. It makes perfect sense. So I can see that happening.
The good news is that it's grilling season. We could maybe wrap up the show on a really good note. The grilling season's underway. This is useless trivia, but I'm all about useless trivia. I just love these data points. But Americans are going to consume, wait for it, 7 billion hot dogs between Memorial and Labor Day. It's called grilling season. So 7 billion hot dogs is 16,300 refrigerated truckloads in Rico's truck. and it means that there's 818 hot dogs consumed every second during that period. And this is even more interesting. This is according to the National Sausage Hot Dog Council. And yes, there is one. I'm just fascinated with this stuff.
Any of our listeners,
I can believe it. I definitely believe it.
I got to say, any of our listeners that have had enough of trucking, you may want to get into the hot dog business.
Well, Los Angeles is the place to be. They consume more hot dogs than any other city. About 30 million pounds they'll consume. Dallas and New York are second. Los Angeles is also the top sausage city, across the country. Chicago O'Hare consumes 6 times more hot dogs than Los Angeles Airport. So there's some fascinating data, but if you go to the National Hot Dog Council, there's a wealth of fun facts.
Well, I can see that with Chicago, because Chicago's famous for hot dogs.
Yeah, absolutely.
They're definitely famous for hot dogs. So in synopsis, to kind of round up the show, basically, everybody just got to continue to hold on with what you got for right now. Try to make sure you're keeping the expenses as low as you possibly can to weather the storm, and try and keep as much cash as you possibly can on hand, and reduce your spending by as much as you can.
Yeah. I think the data point that I would wrap up with, Rico, is from Todd Amon at ATBS. He's like the accountant to the stars. The stars being 20,000 owner operators that he has on his books. He has a +1 -10 mentality. Do 1 load extra per month and slow down by 10 miles an hour. Do those 2 things, that'll put $20,000 on your bottom line.
Whoa.
So +1 -10, slow down to 65 from 75. Do 1 more load a month, because if you're doing 1 more load a month, it's extra profit because you've already factored in all of your fixed costs into your other costs. So +1 -10, I think, is some of the best news I've heard in a long time in terms of what you can do to get by this next 6 months.
I totally agree with him.
Good deal.
Yep.
That's totally feasible, totally doable.
Yeah, absolutely.
Before we get out of here, Dean, let everyone know where they can find all your excellent work and even some of your extracurricular activities.
So you can follow me on the Grumpy Pete on social media. It's not about me, it's all about you. I'm always posting videos of other truckers and truck drivers in action, including our very own Chuck Snow at the ADHS event. You can see he's incredibly Coca-Cola themed forward. You can contact us at askiq@dat.com. And I'm always on social media, on LinkedIn. If you've got any questions, just connect with me on LinkedIn, Dean Croke. You'll find me there. And of course, we're always live Tuesdays at 10 a.m. Eastern on our DAT IQ show.
Absolutely. Well, Dean, we appreciate you for taking time out to join us as always. Thanks for being so gracious with your time on this early Saturday morning.
Yeah. We really appreciate it.
Love to be with you guys. Thank you.
Chuck.
Yeah, if anybody needs me, send me an email, chucksnow280@outlook.com, and I'll get right back to you. Put your phone number on it, and I promise I'll get to you. With that, Rico, I'll let you back in a hole for another week.
Absolutely. Well, ladies and gentlemen, once again, we thank you guys for taking out time to be with us. You could have been anywhere else in the world, but you took a little time to hang out with us. We're always grateful for you doing so. If you would, please, if you found any of this information that we talked about today useful or helpful, by all means, please share the video. And with that being said, we want you guys to stay safe out there, stay healthy, keep it in between the mustard and the mayonnaise, and we'll talk at you same time, same place. God willing, next week. God bless you and good night.
Catch you on the flip-flop. God bless.
Thanks, Dean.
Thank you.
Have a good week. Rest of you.